Hi. Today, my name is BJ the Taxman. Today I'm going to be talking about filing status and standard deductions and taxes. We're getting to the end of the year and the tax season is fast approaching. I want to talk about filing status. When it comes to taxes, we have four main sections. We have the filing status, we have the income, we have standard and deductions, we have deductions and credits, and we have refund or amount due. That's filing status, first part, then income, second part, deductions and credit, third part, then refund or amount due. Those are the four sections we have in our taxes. Now let's talk about filing status. The filing status is up to 5 categories. It determines your category when it comes to your taxes. And we have 5 different types of filing statuses. We have single, we have head of household, we have married filing jointly, we have married filing separate, and we have qualifying widow or widower. That's single, head of household, married filing jointly, married filing separately, and widow or widower. For single, for IRS purposes, if you're single, that means you have no dependents. You might have dependent, but you're not the person taking care of the dependent, or you did not pay up to 50% of care, the amount that it needed to take care of that dependent in that year. That means you're single. Either you're all by yourself or you don't have a dependent in your taxes that you pay more than 50% of the allowances during the course of the year. Then we have head of household. Head of household has, in terms of taxes, has dependents. You have a dependent on your taxes that you pay more than, that lives with you, and you pay more than 50% of the allowance for that year. Then the next filing status we have is married filing jointly. That means you're married and you're filing your taxes together, or married filing separate. You're married, but you're filing your taxes separately. And the last one is qualifying widow or widower. That means you lost your spouse during the course of the year. Right. Then your filing status directly affects your standard deduction. Standard deduction meaning how much of your income that you're not paying taxes on it. That's how much of your income that you're not paying taxes on it. If you're single, the first $12,200 of your income, you do not pay taxes on it. If you're head of household, IRS allow you up to $18,000 or thereabout before you start to pay taxes on it. Meaning that any amount you make over $18,000, that's when you have to start paying taxes on it. And the amount you make at the end of the day depends on your tax bracket that determines the taxes you pay. Then the third one is married filing jointly. If you're married and filing your taxes together, your standard deduction is $24,000. That's your standard deduction. And the last one, married filing separate. That means if you're married and you're filing your return separately, your standard deduction is $12,200. So that's the correlation, or I'll say, how your filing status and your standard deduction affect your tax return. Okay, if you like my tidbit today, go ahead and subscribe to my YouTube channel. Thank you very much, and I'll see you in another video. Okay, bye.